Hello and welcome to WTO Forum. The financial crisis in 2007 brought strong pressure on governments to improve their financial regulations. While some governments have made progress in this respect, there remains a lack of harmony with respect to global financial regulation. The WTO rules do not cover many elements of financial regulation, but they do provide for market opening up opportunities for foreign financial services providers. Through the General Agreement on Trade and Services, the GATS, the WTO deals with, among other services sectors, banking, brokerage houses, etc. The question is, what is the relationship between the GATS, the General Agreement on Trade and Services, and efforts of governments to improve their overall financial regulation? We're very pleased to have with us today two experts on this matter. Lori Wallach, Director of the Washington-based Public Citizens Global Trade Watch Division, and Hamid Mamdouh, the Director of the World Trade Organization's Services Division. Welcome to you both.
Thank you.
Lori, let's start with you. Your thoughts on this?
Well, the rules of GATS, the rules of WTO with respect to financial services, were originally written at the period of major deregulation, and as the history of that agreement shows, pushed by the biggest U.S. and European banking and insurance and securities firms. And they reflect the thinking, very much pro-deregulation, of that era. So while the WTO doesn't set financial regulation, it has binding rules that can constrain countries' ability to implement their national domestic regulations. And there are three particularly problematic issues. One is, while liberalization doesn't have to require deregulation, the specific rules in GATS bring together for any financial sector that gets liberalized certain limits on regulation. And perhaps the most problematic now is a ban on bans. So the inability to just ban a risky financial service if way back in the 90s your country agreed to bind it to the WTO rules. A second issue is that particularly developing countries who are concerned about macro-prudential measures, the flow in and out of capital, not destabilizing their host systems, have started, with the blessing of agencies like the International Monetary Fund, to use things like capital controls or other mechanisms to slow down the wash of money in and out. And those rules have problems with respect to several provisions of GATS, which require openness, no limits on cash flows related to the services that you make commitments on, which is a great idea if you're running an international bus company, but is a problem if it's banking or services where inherently big washes of money is part of the service. It can be destabilizing. And then the third problem is there is a rule that allows a country to defend if at WTO a law is challenged. And as we know under the rules, if a law is challenged, a country has to bring it into conformity, change their law, or they face trade sanctions. The problem is the defense that countries theoretically could use to safeguard prudential financial measures is very vague in its wording, and a lot of countries are worried it wouldn't safeguard enough of their laws. So the bottom line question is, do these rules in WTO need to be reviewed and updated in respect of so many countries trying to re-regulate to make sure there's space to do that without bumping into the trade rules, or worse, being chilled from taking the necessary actions to stabilize the global economy?
Hamid, your views.
Well, thank you, Keith. I think we need first to start looking at what is the meaning of liberalization. The WTO rules actually call for liberalization, not deregulation. Now, we have seen over the years, over the 16 years of implementation of the GATS, a number of problems, the solution to which never lied in reviewing GATS commitments. GATS commitments are about introducing competition in the market, which means that financial operators would operate under the same rules. Now, there is nothing in what we have seen in the financial crisis lately that suggested that the root causes of the crisis actually lied in having competition in the market or allowing financial operators to operate on a level playing field. The question is, do we really need to change the rules, as Lori is suggesting? I have not actually seen any of the WTO members who suggested that the rules need to be changed. We've seen the financial crisis, we've seen the problems, and we've seen the countermeasures taken by governments, and none of the countermeasures actually was hindered by GATS commitments. Now, a little bit of light needs to be shed on what we call the financial prudential carve-out, which is a provision, it's an exception provision in the treaty, which allows regulators in the financial sector in particular to take whatever measures they find necessary for prudential reasons, including even to protect the stability and integrity of the financial system. Now, a lot of measures have been taken over the past 16 years, none of which has been challenged in the WTO. It is interesting to look at what kind of problems we have and what are the root causes for it. And if we're talking about the rules of the WTO, it would be good to start looking at how can we actually establish a causal link, because there's been a long debate. A lot of international organizations who are more specialized in the WTO in the area of financial regulation have actually concluded that WTO commitments and the GATS are not among the root causes for the crisis. So we need to shed some more light on what really caused the crisis. And it all lies in the area of proper regulation. Now, if I may address just one point you made about international cooperation in the field of financial regulation. I think we do need more international cooperation, because you can't actually continue to have a globalization of financial markets while regulation remains strictly domestic. There needs to be more cooperation in that area. The WTO is not the place to do that, but there are other organizations that are spending more time and resources on that.
Laurie, can I just pick up on something Hamid said about this prudential carve-out? Do you think that this so-called prudential carve-out clause is adequate for giving governments the scope they need to regulate their financial sector?
No, because it's very vague as compared to the rules of the WTO with respect to how you liberalize services are very specific in limiting regulation. When I look at the causes of the crisis, I think there's fairly strong consensus that it was over-deregulation, just out-of-control conduct. And if you look at the rules of the WTO, they reflect that era of deregulation. I'm not saying it was the WTO's idea. They reflect the consensus of the time. And so the rules that I think need to be reviewed and updated, and some member countries do, I would send folks to look at the WTO's website to Barbados's paper on these issues, which lays out specifically the conflicts, problems, and some needed amendments. In that situation, you've got very specific rules, for instance, banning bans of risky services, or saying you can't have capital controls. The prudential measure isn't a carve-out. There were, having looked at the negotiating history, some proposals by Asian countries to actually have a carve-out that would let countries say up front, this is prudential, you mustn't challenge it. Now we have a defense. So, for instance, as countries are starting to re-regulate, because it's the case, there haven't been challenges, but it's because it's been such a deregulated environment. Now that countries are starting to re-regulate, you're starting to see sparring. And there's a lot of uncertainty about whether that prudential measure, the defense, which you normally could raise to say, all right, I am breaking the rules, but I have this excuse. It's unclear if it works because the second sentence of the measure maybe cancels out the first sentence, which is a lovely one. There were discussions when the WTO was being negotiated about both having a stronger defense. There were 5 different proposals. The least robust one was adopted, or literally having a carve-out. Some countries, like Japan, Korea, have listed specifically their own prudential cross-cutting exception because they're worried it doesn't work. And so as we look forward to how countries can have the space to re-regulate, some of the issues that have come up, for instance, you have the European Commission's own staff speculating that the European commitments under the old GATS rules might conflict with the financial transaction tax that some countries have talked about putting in place to avoid speculation, the Tobin tax. You have a variety of articles, press, scholars going after the European Union, or actually Germany's they're doing short selling ban and the US flash trading ban. Those are bans in sectors we've committed. You have various countries starting to talk to each other. There's a European Commission request to Chile to remove a particular capital flows control mechanism. And so as countries are re-regulating, thank God there hasn't been a formal challenge yet, but there's certainly starting to be a chilling effect. There's a South Africa case where a ban in derivatives has basically not gone into effect because the South African government said, if we do this, we're going to have a trade challenge and have many millions of dollars in sanctions against our exports of goods. We're sorry, but that's our old commitment. These issues are now starting to rise.
Are we seeing rising tensions, Hamid, among the members on this point?
I don't see actually those rising tensions at all, because what we're seeing actually over the past couple of years in particular, in the wake of the crisis, is governments coming to the Financial Services Committee and the WTO and exchanging views on what happened and trying to understand really how that would interface with their commitments under the WTO. And the conclusion consistently, and Laurie referred to the submission by Barbados, which was a very interesting submission. Basically what they're saying is the WTO and the GATS does not restrict governments' ability to regulate in any way they want. The point about the Barbados paper actually is that it was saying, you see, we will have to invoke the prudential carve-out, and that would mean that we would need to deviate from our commitments. But this is precisely why the prudential carve-out is there. It's to allow governments to do things that, on the face of it, their commitments might not allow them. Now, if you look at the commitments and particularly at the products, the financial products that are approved by different jurisdictions, you won't see that the GATS commitments actually restrict the ability of countries to allow certain products or disallow them. From a risk management point of view, just look at the situation of Canada and the United States. The two financial markets are comparably liberal. One is more deregulated than the other, which is obviously the United States. Why didn't we see the kind of contamination in the financial system in Canada similar to what we have seen in the United States? The cause for it is pretty clear. The deregulatory approach that Laurie referred to at a certain era led the United States to go in a certain direction, while the Canadian financial system actually did not share the same view, did not apply the same regulatory approach. GATS commitments are very comparable. So where is the difference? What are the root causes here?
Laurie Wallach, your final thoughts.
Well, the Canadian-U.S. situation is a perfect example, I think, of the opposite point, which is Canada, in looking at the GATS rules, realized it conflicted with what are some very strict regulations. The irony is the OECD, the Organization of Economic Cooperation and Development, typically slams Canada as being not open, not liberalized, because they have a rule that requires domestic ownership up to a certain percentage of banks. So as a result, actually, they have a handful of banks, they're mainly national, and they're very strictly regulated, and they had to take an exception in the WTO because of the underlying rules to be able to maintain that. So back to the Barbados' paper. The paper actually lays out 5 amendments to the GATS. The paper doesn't say the current exceptions are okay. They say the time has arrived, after things have settled down, to review and repair, to update, to bring the WTO up to where the consensus for regulation is. And those 5 amendments, hitting a lot of the issues I described, I think are a major step towards what needs to happen to ensure that the WTO is not an obstacle to financial stability going forward.
Hamid Mamdouh, you have the last word.
I think the Barbados paper didn't go very far, particularly because it doesn't change much in the current situation. The amendments that you're referring to were actually discussed in a very, very theoretical and academic way, but none of the recipients of the paper, including a lot of developing countries, particularly those who were actually in the forefront of bringing the question of understanding what happened to the table in the Committee on Financial Services, like Peru, like South Africa, did not actually support those amendments. I think we need to put things in the proper perspective. I don't see where that paper is now. It was a very useful contribution to the debate, but it wasn't actually put into action because there wasn't seen any need to do that.
Hamid Mamdouh, Laurie Wallach, many thanks to you both, and thanks to you for watching WTO Forum.